Hi everyone, this is Michael Saldana with the Amanda Vang team. It is August 8th and the real estate market has been pretty crazy in the Bay Area, but we're going to break it down. Can't wait to show you. Alright guys, so Amanda tells me I only have 10 minutes to do this entire video. I think the last one was 24 minutes long. So I'm gonna move fast. Let's get started with San Jose. Here we go, San Jose, California, single family homes, median list price 1.349 million. Big things to note are median days on market. Still looking at 7 median days on market. That means it is super hot. That means most homes are selling in 1 week, 1 weekend open house. Another thing to look at is price decrease. So 13% price decreases indicates that we're kind of at that top end of the market. You know, it was hotter. We were seeing this market action index at 100. Maybe a month or two ago. Now it's at 76, which is still a very strong seller's market. There's still competition, but not quite 10 or more offers, maybe like 5 or less. But still a multiple offer situation, I would say, in most cases. Looking at median list price, you know, you can see a steady increase over time, and price per square foot, a similar thing. You know, homes are just getting more and more valuable. There's not enough room. Let's see. Taking a look at the market segments, the bottom quartile of homes, single family homes in San Jose, you're looking at $948,000, 1,200 square feet, a 4,500 to 6,500 square foot lot, 3 bedrooms, 2 bathrooms. The biggest thing I want to show you guys today, I'm not going to read through all the numbers, you can take a look at them, but I'm going to highlight we have a lot of absorption. So let's actually pull up this graph on the inventory. This is what I wanted to show you. The last market update, we were maybe around here where inventory is slowly picking up. Now inventory is picking up more, but what we're seeing is also, it's also getting absorbed. This dashed line, that is going to be the 7-day moving average. So when it spikes up like that, that's because we've had a lot of inventory come to the market. So you can kind of see in prior years, in 2019, inventory was spiking up and then your 90-day average was kind of following behind it, indicating a buildup of inventory. So we've had it spike up, but then what's interesting is that it spikes back down because we've seen inventory go up, but then the absorption is also keeping up with it. So this is a very interesting market to keep an eye on. Inventory is maybe about half or even almost a quarter of some of the maximums that we've seen before. So still a lot of demand, a lot of absorption. So you could say maybe about 100 and almost 200 homes came to market, but almost 380 were taken off the market. Crazy, very cool. All right, taking a look at condominiums in San Jose, also a strong seller's market, median list price at $750,000. Also pointing out 7 median days on market, so still a very hot market here. Similar to the single family homes, we're looking at 14% price decreases. So that means that some seller expectations were a little bit too high. You know, it's been a really hot market. So maybe some agents talked themselves into a corner and started off at a number that was a little unrealistic. Maybe it would have worked 2 months ago, but now, you know, if you only have 5 buyers looking at your house instead of 15, because the buyer pool is that much smaller now, you're not going to be able to get, you know, $100, $150, $200,000 bid up. Interesting to look at inventory is building up inventory of 277. Oh, the graph is already here. So similar actually to what we saw in single family homes. There's a lot of inventory spiking up with the 7-day moving average. Last week, I think the numbers you saw, 30 or 40, were new in each quartile. But what's interesting to see is similar to single family homes, a lot of homes were absorbed, almost twice the number absorbed that were put onto the market. I think one of the reasons for this is that people were kind of taking weekends off. So when you had an off weekend and an on weekend, we kind of noticed that at the open houses. There was a slow weekend, there was a heavy weekend, there's a slow weekend, there's a heavy weekend. So, you know, you can see that 7-day average for inventory is spiking up like it normally does in the late summer months before school. And then the question is, you know, are we going to have strength through the winter or not? I think it's going to be pretty strong through the winter because inventory is really low right now, at least in these areas. But we'll see what happens. Let's see, what are the important things to point out? We have the bottom quartile. You can get a condominium or townhome for about $500,000. It's going to be a 2-1, maybe 39 years old, so it's got some age to it. But, you know, 852 square feet, it's a place you can call home. All right, let's go ahead and move to the next one. We're talking about Sunnyvale, California next. The median list price is $1.98 million, much higher than San Jose. Also pointing out median days on market is 7. So once again, that 7 median days on market, that means most of the homes on the market are selling at that. That's like the most common. It's similar to average, but it's not quite the same as like a weighted average. You can see this average days on market, that is the weighted average. But what happens is you have a couple homes that are sitting on market for 90 days, and there's offset homes that sell in 7 days or less. So that's where median, a slightly different statistical term. Median is the most common occurrence, you could say. Let's see, price decreases 13%, so similar to what we saw in San Jose. You know, while the market is very strong with 7 median days on market, we are kind of maybe at a plateau where pricing really is kind of as high as it's going to get. I mean, it was super high earlier this year. Now it's still very high, but I mean, that's good. People are still buying homes, and I think it still has a lot of strength. So looking at the median list price for single-family homes in Sunnyvale, it's showing a good strength over time. Looking at price per square foot, this is always an interesting graph in Sunnyvale because price per square foot is already pretty high. It can't really get much higher. Like it's never broke average 1,200 a square foot, and average right around 1,000 or 1,100. Like I know you can get a single family home on El Camino for 1,000 to 1,100 a square foot. That's yeah. Let's see, other important things to look at. Similar, let's take a look at this inventory. Similar to the inventory graphs that we were looking at for San Jose. We've been seeing some spiking up, so a lot of people, people are putting more and more of their homes on market. But the nice thing is that they're getting bought up, they're getting absorbed, so we're not quite picking up inventory. However, in Sunnyvale, you'll notice that actually inventory is kind of close to the maximums that we've seen before. With San Jose, we were maybe 25% to 50% of the maximums that we've seen before. In Sunnyvale, the single-family homes, it's actually we're kind of up there with what we've seen in past years. So I wonder if that's going to kind of tamp down the market a little bit. But even with that being said, this price per square foot graph is going to be, this is not going to continue. You can see it kind of spiking up, but in the end, the homes are going to sell for, $1,100 a square foot. It's been like that for the past few years, and you might get a little plus and minus, but that's how it goes. Alrighty, moving on to condos and townhomes in Sunnyvale. This is what we're looking at. 996 median list price. Pretty steady over time. A less strong seller's market, so at 60 compared to the 70s that we've been looking at for the areas that we've already covered. But similar to them, we're also seeing that median days on market of 7. So that means homes are flying off. 1 weekend open house taking offers, probably multiple offer situations. However, one interesting thing is that we have this 11% price increase and also 19% price decreases. So I learned from our broker that price increases, that's another indicator that you'll see where sometimes people are expecting 5 offers, especially in Sunnyvale, which is a competitive market with low inventory. But they'll list maybe 7 to 9% below the expected or the comparable price supported by comparable homes, and then not get enough bids, because sometimes that can be, at this median list price, that can be $100,000. And if you don't have, if you've got 5 to 10 bidders and 5 to 10 offers on your house, you can cover that gap from 900 to $1 million or $1 million to 1.1. But if you only have 2 offers, 3 offers, which is kind of becoming a little more common nowadays, that's not going to get you from 900,000 if you want $1 million. If you only have 3 offers, it's going to be hard to really negotiate them up, and buyers are getting a little tighter nowadays. So that's where you'll get a price increase. So the seller will say, I only got 3 offers at 900. They're playing hardball. Everyone's playing hardball. So let's go back on the market next week at 950 or 975. You get those same 3 offers. And we always say one offer could be $10,000, $15,000, $20,000 as they kind of bid up and stack on each other. So relisting it, doing a price increase from 900 to 950 to 975 gets you closer to that, supported value of $1 million, not exaggerating anything, a well-founded, well-supported value. And that's where those price increases, that's where you'll see that. That's another indicator that we're at some sort of a plateau. And likewise, like I mentioned earlier, the 60 compared to the 70 that we saw in single-family homes in Sunnyvale, as well as both categories in San Jose. But that being said, still very strong. Looking at the median list price, it does have a slight downwards trend. But I think that maybe that's because there's a lot more inventory coming to the market of smaller condominiums and townhomes. Looking at price per square foot, kind of similar to what we've seen in single-family homes in the past 3 years. It's been hovering right around $850. It's a little bit lower than that right now, actually. We're at an average of 8. 90-day average of 830. So, but it kind of hovers up and down. Maybe that ties into this less slightly less of a strong market. But similar to what we saw in San Jose and all the other areas, we have great absorption. So people are buying whatever's on the shelf. And kind of like what we've been seeing throughout the summer is this inventory kind of pulsing up and down. But actually you'll notice that inventory here, tying in with the less strong of a strong seller markets, we're actually at almost a new maximum for inventory for single-family homes and townhomes. So I bet in the next couple of weeks, whatever inventory is building up, is spiking up, it's either going to build up or it's going to get taken off the shelf. Knowing Sunnyvale, it's a competitive market with 57, a small and relatively small inventory of 57. I'd say if there's a deal, people are going to buy it. So we'll see. Okay, next up, Santa Clara, California. Median list price, 1.499, 1.5 million. Important numbers, median days on market of 7. Another thing, actually, average days on market is 55. I think most of the other areas were 30. Interesting to see this, we have price increases for single family homes in Santa Clara. So similar to condominiums in Sunnyvale, price increases in addition to the price decreases. So that's in maybe some softening of the market. Like I said, actually, I don't know if that's good. Here I wouldn't say it's the market softening. I would say maybe there's just less bidders, and then people know what their home is worth. Look at this median list price, stayed stable over time, probably price per square foot. Yeah, kind of we're at a good place, but it's been in the same region. Let's take a look. What else is important? Let's just go down to the quartiles. Let's see. Yeah, inventory I think is the most important graph that I want to look at this point in time, because what you'll see is that some of the areas like here, single family homes in Santa Clara, our inventory, we're not quite at the maximums that we've seen before, maybe almost maximum we saw last year, but not quite that maximum in 2019. So there's still a lot of competition, a lot of absorption. So, almost 44 homes that were purchased and taken off the market, with about 21 homes getting put on the market. Very competitive. Interesting. Okay, going over to Santa Clara, condominiums and townhomes. 848,000 median list price, steadily increasing over time. This is an outlier, 21 median days on market. Also note it's kind of a smaller inventory, 37, so smaller sample size, but still that's pretty significant, meaning that that the average condominium is selling in 3 weekends of open houses. That's, we'll see. Let's take a look at these graphs. Okay, we've already got the inventory graph pulled up. So actually this is interesting because we're at an inventory level that's similar to 2019, but less than last year. I mean, it's weird, we didn't see inventory buildups in any of the other cities over the pandemic, but I don't know, the market's different. But sure enough, we do have a lot of absorption though. So actually, 13 homes were taken off the market when only 37 homes are on the market. So 1/3 of the market was purchased. That's kind of a lot. And only, I think this is a big telling numbers, only 4 new homes were listed. So you'll see, yeah, it's kind of like an on and off weekend. One week on, 1 week off. That 7-day average will reflect some of those weekend seasonality things where people are vacationing or not, or looking at homes or one or the other. Interesting. Let's see, yeah, very interesting. So I mean, I think that you see that this seller's market is less of a strong seller's market, not quite the 70s we saw in the areas. Interesting that we're not seeing any price increases here, but probably with condominiums, the market never was super strong. Like you never saw 10 or more bids for condominiums. That was always for single family homes, except in the most competitive areas. So, okay, moving on. Campbell, California, median list price, 1.599 million. Important, 7 median days on market. It's interesting to see, actually, that was up for the past couple of weeks, for the past month or two, that was getting up to 14 to 21. Cool to see it at 7. That means people are moving. No price increases, so that's indicating a strength and confidence in the market. Some price decreases, so it's not out of control, but it's, in control, right? Not out of control, so it's in control. Okay, median list price, yeah, I did this weird thing over the pandemic, a lot of big homes, whatever, but it's good to see that at median list price is bumped up to 1.4, 1.5 million from 1.5-ish for what it was before. Price per square foot showing a nice steady increase over time. Let's see what's most important. Let's take a look at inventory. Same thing that we saw in the other areas. Campbell getting up to the same inventories we saw last year, but nothing even close to what we've seen in prior years. We have a lot of absorption, so what's probably going to happen is that the buyer pool already is kind of small. The inventory of 37, so there's probably not a huge buyer pool. likely what is this, 12, 20, 26 homes that were taken off the market with an inventory of 37. So that tells me there's gonna be a little bit more competition coming up, and then there's just not a lot of homes coming in the market. So definitely some competition there. And then Campbell Condominiums and Townhomes, $995 median list price. We have 24% price decrease, so that's a lot, and then 6% price increase. So both of those are kind of in play here. Median days on market is still 7, so it's still moving, and inventory of 17, well, this is just kind of a smaller market. Campbell's not a huge city. Median list price, pretty stable over time. Price per square foot, also pretty stable over time. That's how it is with condos. And then inventory, we're kind of at a midway point, so not high, not low. Interesting to see that our absorption this week was was less than what came onto the market. So that's different from all the other areas that we looked at. I don't know, can't explain it, but I assume that inventory is very small, and maybe with seasonality, like I was saying, a lot of people are on vacation, while a lot of people that are not on vacation, they're looking at home, so it's kind of like an on and off. It's weird, but we'll see how everything plays out in the near future. That's about all I have for today, so thanks for joining us. I know I went over the time limit, but hopefully that was good information. A lot of things are changing in the market, but it looks like things are still pretty strong. I think the one big indicator was that pretty much all the areas that we looked at had 7 median days on market. That means most of the homes that are being listed are selling in 7 days. That's one weekend. That's a good sign for a strong market. Now, the other thing that we're seeing is that there's price decreases, so we're not having huge bidding wars and things aren't out of control. But what people are saying is that, as people come back to school, things usually get busy. So it's, real estate in the Bay Area in the past few years, we either have a hot winter or a cold winter, and I think it's gonna be a hot winter. We'll see. Okay, stay tuned. Thanks for watching and staying till the end. Have a great day, everyone. Bye.